Good afternoon and welcome to our final quarterly webinar of the year, where I'll be looking at price movements in motor and home insurance over the past quarter, going back a little further than that, and thinking about what might come for the rest of the year and looking forward into 2026. As always, if you have any questions, then please log them in the chat. And if we have time at the end, I'll attempt to answer as many as I can. Firstly, a bit about Pearson Ham. So we are pricing consultants. Pricing is what we do, and that's our core focus, whether it's in insurance or other sectors. And our mission is to help our clients succeed through better pricing. And in insurance, one of the ways that we do that is through providing market price tracking to give clients a real context for trading performance, an understanding of competitor movements, and how that market is impacting on their own performance. So methodology is important. You can't just run quotes through comparison sites and take the data and treat that as factual. There are a lot of influencing factors that need to be considered. So we have real people, we have real consumers. We're running their genuine details through the comparison sites with their permission and with the permission of the comparison sites themselves. So we are able to get a clean read on that. There's a rotation of people as well. So we try to replicate real customer behavior as much as possible. And it's not a case of just running everybody every day, but we do have a daily view on price movements within the market. There's also data cleansing that has to take place afterwards. There's a lot of unusual, anomalous movements that are seen within insurance markets, which may be caused by the process itself. So you have to understand what to look for there and to remove anything which looks as though it may not be caused by an actual price change by an insurance provider. Key metrics are put together daily, and clients are able to access our interactive online portal, as well as having PDF reports emailed directly into their inbox every day. So we're currently in car insurance, home insurance, van insurance, pet, travel, and landlord. And we provide those services to a broad range of clients within those industries. The majority of the large PCW players will be subscribing to our data services. As a client, I'll just say you are able to see granular details. So as we go through the presentation today, we'll be looking at some individual provider movements. They will be anonymized, but if you are a subscriber to our data, then you are able to see who those particular competitors are. And if they are competitors of yours, that will give you a great insight into what might be impacting on your own performance. Okay, so to start with, we are going to look at motor insurance and what's been happening over the past 3 months in motor. So we're seeing a continuing trend. So I feel a bit like a broken record. Every quarter, we're saying the same thing. Prices have come down. So this quarter, they've moved down by almost 3%, which follows a 4% movement in Q2. So we have seen a bit of a slowdown in the rate of premium deflation based on the last quarter, but we are still seeing them coming down. And last month was the biggest monthly reduction of the quarter. But as I say, there's a slight slowdown in the rate of decrease, but still moving in the same direction. Looking at over 6 months, we can see the pattern here. So as I said, there were bigger price reductions being deployed in Q2, but there's been steady reductions throughout Q3 as well. So about 1% each month over the past 3 months we're seeing here. So just to clarify as well, these are the average of the top 5 prices that are quoted on the comparison site. So it's a view on how competitive prices are moving within the market, and that will be the same when we come to look at home insurance later on as well. When you're looking at averages, that there's such a range of prices that are quoted, so it could be from £300 to £6,000. So we tend to focus on what competitive prices are doing, which is most impactful on the market. Okay, so looking back over the past year, this means that prices have now come down by 15% over the past 12 months. And we can see that a lot of those big reductions were happening in the later part of last year and into the beginning of this year. So November, December, January, we can see significant monthly reductions over 2% each month there. So as I said, there has been a bit of a slowdown, but prices are continuing to drop. They're moving in the same direction, and that's been a consistent view for quite some time now. So looking back over the course of the past 24 months, we can see that prices are now just over 22% lower than they were 2 years ago. So we can see there were some increases in October and November 2023. Some reductions followed that. At the beginning of 2024, some slight movements upward, but ever since April 2024, we've seen a consistent downward movement in prices every month, which has now led us to this position where we are over 22% lower than we were 2 years ago. So quite a significant period of prices dropping. So it's been a long time, and there's been some big reductions observed here. This is a favorite of mine, so I like to go and look a little bit further back to see what does that longer term trend look like. So we've had a lot of external influences which have been quite unusual over the past few years. So from COVID, where prices dropped significantly, we saw the implementation of GIP and ban on dual pricing, which meant a rebalancing between new business and renewal pricing. So bearing in mind, this is a tracker of new business quoted prices. And then we saw premium inflation, so escalating cost of claims drove premiums up to cover that cost. And then over the past 2 years, there's been more intense competition and some more kind of growth strategies trying to play out here. So there's been a lot going on over the past few years. And if you look at it from the beginning of 2020, actually prices now are still almost 10% higher than they were then. So throughout these 4 distinct periods, we've ended in a position where actually we are slightly higher than we were pre-COVID. Thinking back to that time, I think we had experienced, if you think back a little bit further to 2019, prices had dropped down, and I was expecting the market to turn at the beginning of 2020. And actually, we did see some of that in the first couple of months. And then March is when COVID hit and things took a turn, which couldn't have been anticipated. So that's where we are currently. So prices have come down significantly. We're much lower than we were 2 years ago, but actually still slightly up on where we were at the beginning of 2020. Looking at some of those individual insurers. So this is a basket of some of the larger insurer groups out there. So this isn't by product, this is by provider groups, so insurers and brokers. We can see that there is some difference in the price movements that we are observing for Q3, so including some increases. So although the average is down by around 3%, the average of the top 5, we are seeing some providers with increases of up to 7% during that 3-month period. So we've got 3%, 5.4, 7%, as well as more of these kind of smaller reductions coming through as well. So I think we are starting to see, and we did see last quarter, some of this divergence happening. So, I mean, it has been a prolonged period of premium deflation, and it's not going to be sustainable for every insurer. So some may be doing okay, but for others, they have obviously reached a position where prices need to start to come up again. And I don't think it will be too long before others have the same view on things. Looking at the same insurers trended over a 12-month period. So this is providers 1 to 5, and these are where we've seen the biggest price drops from that cohort over the past 3 months. We can see that the year-on-year differences are still kind of between 10 and 19% down year-on-year, and the trend there has been fairly consistent for most of those providers over that period. Where we're seeing the increases in Q3 or smaller reductions, then it's a slightly different pattern. We can see that actually the trend was for bigger reductions to be deployed at the end of last year. So if we look from October to January, we can see that's where these providers were deploying reductions. And since then, it looks like they've been trying in most cases to claw back some of that premium and to put price increases through, which obviously there's going to be an impact on their ability to drive new business and to maintain growth with the current market as it is. But that's what we're seeing there. So year-on-year prices for this cohort between minus 14%, and actually we're now seeing some positives. So a provider here where prices are 2% higher than they were this time last year. So as I say, we're seeing a bit of divergence by individual insurer, and that I expect we'll see more of as we progress through the year. Taking a bit of a segmented view, so this is a driver age view. We can see that, I mean, essentially everybody's moving in the same direction. There may be slightly different rates of decline, but they're all moving in the same direction. So the range there between minus 13 and minus 16% down year on year. So price reductions for older drivers haven't been quite as extreme as for some of the other segments, although as we can see here, they are still pretty significant. And the biggest price reductions that we've seen here are for the younger middle age, so between 26 and 40-year-old drivers are seeing the biggest reductions over the course of the year. This is just to highlight some of the differences that we're now seeing by provider. So from that group of 10 large insurers, if you look at provider 1 and provider 10, so 10 is where the 7% average increase went through, and provider 1 was the biggest discount during that period. We can see, are they being targeted and what does that look like? So we can say actually where the discounts or the price reductions are being implemented by this particular insurer, they are quite targeted towards the older driver. So we can see that much smaller reductions have been applied to younger drivers. And then looking at the provider 10, where 7% average increase has gone through over the past 3 months. It's fairly flat, but slightly skewed towards younger drivers receiving bigger increases than some of those other age bandings. So there's the youngest drivers and the oldest, so the over 70s, they're seeing bigger increases than some of those others. So it's interesting, and depending on which segments you are active in and who your specific competitors are, then you may be feeling the pressure from some of these reductions or the benefit of some of these increases, depending on where you sit. Okay, so that's motor insurance. As I say, we've seen prices continue to drop, bit of divergence by provider, some fairly large increases being deployed over the past few months. What's happening in home insurance? So again, it's a similar picture. We are seeing prices continue to drop in home insurance. So this is combined cover, and again, it's the average of the top 5 quoted prices. They've come down even more so than motor insurance, so almost 5% drop over the past 3 months. So you can see July and August monthly drops of 2%. So significant price reductions being observed in home insurance, even more so than motor over the past quarter. If we look back over the past 6 months, we can see it's a fairly consistent picture here. So prices now dropping by 8.6% over that 6-month period, which brings us to a year-on-year position of just over 13% down. So we can see here prices have dropped every month apart from November 2024. So again, it's a similar picture to motor. We see a consistent trend, prices dropping over the past 6 months. Some of the declines here have been quite a bit sharper than in motor. And I think what we did see was the trend started earlier in motor. So home's probably 3 or 4 months behind. So I would expect that to ease off, but maybe motor will be easing off before that. Looking back over the past 2 years, we can see a very similar trend to motor here. So actually prices are still 6.4% higher than they were 2 years ago in combined cover. So this is because of the significant premium inflation that we were observing in 2023 and 2024. That went on, as I say, for longer in home than it did in motor. So the kind of the turn to price reductions was a bit later, and that accounts for the differences in the year-on-years that we're seeing. So we can see actually the extent of the price increases looks a lot higher than the reductions that have happened subsequently for home insurance. So prices down a lot year on year, still up on 2 years ago, and we'll see what happens with that as we move throughout the rest of this year. Again, taking a similar view as we did with motor. So this is a cohort of 10 of the larger insurance providers for combined cover on home. And we can see that actually most of them are continuing to drop prices. There's one appearing here where prices have increased by almost 1% over the past 3 months. But for the main, prices are dropping. We can see some pretty significant drops, 6-7% here over that 3-month period. So I think continuing to drop, and we probably will see that continuing for the rest of this year. Looking at it over a 12-month trended view, then we can see this is where the biggest price reductions were observed in Q3. So prices here are now between 1% and 14% down year on year. So some big drops, but some of them actually haven't come down that much, and we'll have a look out for those. And where smaller reductions or that one increase was observed, actually the range based on year on year is pretty similar, so 1% to 13% down year on year. So even where we did see that increase, I think reductions previously had meant it ends up in a similar 12-month position. Okay, so moving on to contents only. Again, a similar picture to what we've seen on combined cover and motor insurance. Again, the reduction is more in line with combined cover, as we might expect, so almost 5% down on the previous quarter, with reductions each month. Over the past 6 months, that means that prices have come down by 10%. And again, it's a very similar picture as we've seen, the same monthly trend, bringing prices down to that extent. And year on year, average of the top 5 competitive quoted prices for contents only is now 13.4% below where it was 12 months ago. There's a slight difference here between contents only and combined cover, where the prices are also lower than they were 2 years ago. Contents only didn't see the same level of premium inflation in 2023. So that means the reductions. We have seen a similar trend in terms of premium deflation over the past couple of years, but we didn't have such a high starting point from contents only, and that could be because it's not as impacted by some of the weather-related events that may impact buildings more so than contents. But that's what we're saying now is prices 8.5% lower than they were 2 years ago for contents only. Looking at some of those individual providers, then yes, we are seeing most of them applying those reductions. There are some increases and one over 5% of an increase over the past 3 months. So there is some divergence here. And again, similar view as we've looked at with motor and with combined cover. If we're looking at those providers where the largest reductions were seen over the past 3 months, then there's a range between 9% and 22% down year on year. And interesting, there was quite a plateauing on some of them at the beginning of the year. Between January and June, we can see some fairly flat movements, but more competition creeping in and driving prices down since then. If we're looking at some of those providers with smaller reductions or where increases have been applied in Q3, then we're looking at prices which are between 15% down and 17% up. So most of them are sort of below 7%, so between 7% and 15% down year on year. There is one notable exception here that we can see it's up 17% year on year. So a different pricing strategies playing out. If that's one of your competitors, then actually you're in a relatively good position. You shouldn't be feeling too pressured. So that's where we are. That's what we've observed. What's happened over the past 3 months and going back further. So continued price drops in all of those markets. Now, what do we expect to see coming up? So for the next 3 months to the end of the year, and then beyond that, where do we think we're going to end up? So this is what it's been like. It's a bit of a roller coaster, and that's usual within the UK general insurance market. There's always been a cycle within insurance pricing, where competition drives prices down to a point where insurers are making losses, and prices have to come up again. And that tipping point is typically, it has been when the industry level core start to get to 105, 106%, creeping over 106%. That generally tends to be when we see prices starting to come up again. So that I think is a good rule of thumb when we're looking at, well, when do we think prices are going to start to move? That tends to be something which has been fairly consistent over several years. So as I say, there has always been this cycle of prices coming up and prices going down. PCWs and increased competition, so competition becoming more intense because of that channel, has meant the frequency has changed. So that has meant the cycle is happening much more frequently. And in recent years, the unusual external factors have made the level of price movements much more extreme. So COVID, JIP, the kind of escalating inflation and cost of claims, growth challenges. So those things have meant the movements that we're seeing now are much bigger than they would have been previously. So where do we expect to go to for the rest of the year? I think from what we've seen, things are probably going to continue to come down over the next couple of months. EY are predicting a core of 107% for next year. So that's an interesting figure. That's why I mentioned the 106, because that generally is where we tend to see prices starting to come up again. However, that is based on a prediction of premiums dropping 6% this year. So as I say, we've already seen so far this year, well, prices over the past 12 months have come down 15%. So that could mean things are in a slightly worse position than that. However, we've also seen some pretty good results from the larger insurers this year as well. So looking at half-year results, profitability, looking quite strong. So actually, it's difficult to say where that might get to. So I think there was a figure of 100% core that was expected this year. So it may be slightly better than that. So we'll have to wait and see on that. And there's also been a lot of consolidation in the market. So Ageas and eSure acquisition going through. We've got Aviva and Direct Line, of course, and we've got Market Study, BGR Atlanta. So all of these the mergers and acquisitions should create efficiencies within those firms, which would help reduce the costs and could mitigate some of the challenges there and enable more competitive pricing within the market. But there's a limit on how far that can go. So where does that leave us for the rest of this year and moving into next year? I think given the trajectory that we've seen, I would be very surprised to see any sort of upward price movements at a kind of average or competitive price level this year. So I think prices are going to continue to drop. The rate of decline might slow down, but I think the direction is probably going to be maintained. I think providers will have reassessed the situation for next year, so that those planning processes are well underway, and I think that's when we would start to expect things to bottom out. I think prices have come down so much in the past 2 years that we must have reached a point where insurers are feeling slightly uncomfortable and things need to turn. However, as I said, looking back, motor prices are still 9% higher than they were at the beginning of 2020, so there may be some flexibility. So for next year, I'd expect to see premium inflation return. So I do think this cycle is going to turn and it's going to bottom out and things will happen. I don't expect such a huge level of increase as we have seen in the past few years. So probably somewhere in single digits, 5%, maybe up to 10% growth for next year. And that for motor predominantly. Home, I think maybe slightly less than that, but I think it's only because it's a couple of months behind motor in terms of the cycle anyway. So that's where we are. That's my view on what's likely to happen. I think we've slightly run out of time. There are some questions in the chat, which I'll email you directly with any answers I have to those. So thanks very much for your time, and I shall look forward to seeing you next year. So for our first webinar of next year, which will be looking at Q4, which happens in January. So have a good Christmas and New Year. Seems a bit early to be saying that, and I shall see you next time.